January 20th, 2026. The Dow plunges 870 points. The S&P 500 drops 2%, its worst day since October. The Nasdaq crashes nearly 2.5%. But here's what truly shocked the financial world. A Danish pension fund announced it's exiting US Treasuries entirely because of threats over Greenland. This isn't just market noise, and Wall Street is terrified you'll find out why. Subscribe right now, because what I'm about to reveal shows you exactly why smart money is fleeing US assets, and more importantly, how you can protect yourself before it's too late. First, let's talk about the end of US primacy. Here's the proof. The S&P 500 fell 2%, even though 81% of companies beat their earnings expectations. The dollar fell nearly 1% against foreign currencies, and gold hit another record high. When investors flee to gold during good earnings, that's not about fundamentals. That's about fear of America itself. For the first time in decades, Wall Street is telling clients to hedge against US risk. Second, the dollar is collapsing. It fell off a cliff on January 20th, losing almost 1% of its value in a single day. When the world's reserve currency weakens this fast, it signals a massive loss of confidence. Denmark's pension fund didn't just reduce its holdings, they're exiting completely. And other European institutions are quietly doing the same. This is a trust crisis. And when trust evaporates, capital follows. Third, the Magnificent Seven are bleeding out. Apple and Meta are down 8% in 2026. Microsoft has fallen 6%. Nvidia and Tesla each dropped nearly 3% in a single day on the Greenland news. These are America's crown jewels, and they're getting slaughtered by geopolitical chaos. Fourth, investors are fleeing to safer markets. Analysts are now openly talking about deploying capital in markets that are more predictable. Europe, Asia, anywhere but America. Why? Because the president's tariff threats over Greenland prove US policy is now unpredictable and destabilizing. So, how do you protect yourself? Here are 5 critical strategies. First, diversify away from US-only exposure. Allocate 20 to 30% to international stocks, like the VA or EM ETFs. South Korea's KOSPI is up 14% this year, while the S&P is down. Second, add gold. Gold hit another record high during the sell-off. Allocate 5 to 10% to gold through an ETF like GLD. Third, shorten your bond duration. Long-term bonds are getting hammered. Move to short-term bonds or just hold cash in a high-yield savings account. Fourth, avoid overexposure to the Magnificent Seven. Consider an equal-weight S&P 500 fund like RSP to reduce concentration risk. And fifth, keep cash ready for opportunities. Hold 10 to 20% in cash so you can buy quality companies at a discount once the dust settles. Here's the bigger picture. Wall Street isn't selling Greenland mining stocks. They're selling America itself. The Greenland crisis has exposed something terrifying, that US policy is now driven by unpredictable ambitions. The era of American financial dominance might be ending, and the smart money is repositioning now. Don't be the last one out. The damage is done. Global investors now see America as a geopolitical risk, not a safe haven. You have a choice. Ignore this and hope it blows over, or protect yourself now. Subscribe for more critical financial news that impacts your money. Like this video if you're taking action, and share it with anyone who needs to hear this. Thanks for watching.